Yeah, since we last talked, there hasn't been a ton. There have been a few stories that caught my attention, and I'm constantly trying to find new stories, and that's important. It's an asset that is depleting in nature, it is depleting above ground, and it is increasing in its use cases.
Salutations, audience. Prepare for an enlightening exchange with the insightful Andy Schectman. BRICS nations are revolutionizing financial norms by issuing bonds exclusively in local currencies, moving away from the US dollar's traditional ties. The gradual decline of dollar hegemony can be seen as a mosaic of cuts. Get ready for a fascinating journey through the ramifications and revelations of an extended BRICS coalition that includes influential players such as Saudi Arabia and Iran. We invite you to explore the ever-evolving canvas of global economics, where each moment offers a unique perspective and new insight.
Right now it's 85-1. This was in mid-2010. I said that's the second time in human history, going back 5,000 years, that it's ever happened. This is an anomaly. We need to tell people to sell their gold and buy silver. And we did that. And I called all my clients and I said, if you own gold, let me sell it to the market for you and let's trade you into silver. Because this is an anomaly in every respect of the word. And in theory, you would have received 85 ounces of silver for every 1 ounce of gold. And within 8 months in mid-2011, you had $50 silver and 1915 gold. That's 37-1. So anyone who would have traded 1 ounce of gold for 85 ounces of silver, playing this historical ratio, in less than 10 months, they would have been able to switch back using only 37 ounces, making over 2.25 times what they started with. I am a big believer in mathematics and in ratios, but like I said at the onset, markets can stay irrational longer than people can stay solvent. I think the argument is still as strong as it has ever been. It is still an anomaly in geological sense and an anomaly in price ratio sense going back 5,000 years. And, one of these things that I would call maybe the greatest calculated speculation I've ever seen, I think it's the trade of a generation. I don't say that lightly. I will be the first to admit I'm surprised it has stayed here where it has. But to what Rick had said, what Rick was saying was that gold in the previous four bull cycles led the way. Well, that's exactly what gold is doing here. And what he would also say is that when silver finally caught up in terms of a percentage gain, it catches it and actually surpasses it in terms of its performance. And when you look at silver from every single metric, aside from the fact that it holds the largest concentrated short position on any commodity traded on the exchange, which just reeks of manipulation, it is an asset that is increasing exponentially in its demand in green, in digital, and military applications, not to mention monetary, and it is decreasing. And it's decreasing below ground in the respect that for 5,000 years, the ratio of 16 ounces of silver to 1 ounce of gold not only was consistent in its price, but it got that price ratio because of its geologic ratio. And so for as long as time goes back, you'll see a 16-1 ratio gold to silver until just recently, where guys like Keith Neumeyer, who you've had on your show, I believe, will say it's coming out of the ground right now at 7-1, and he would know. He's the CEO of one of the largest silver mining companies in the world and understands this. So it's an asset that is depleting in nature. It is depleting above ground, and it is increasing in its use cases. So I will still say, yes, it is. Yeah, since we last talked, there hasn't been a ton. There have been a few stories that caught my attention, and I'm constantly trying to find new stories, and that's important. But this week, there wasn't a ton. One of the things that I think really is resonating with me is the fact that, look, when we talk about gold, it is infinite duration and finite supply. I think that's a cool way of explaining it. And when you contrast that these days with dollars and treasuries, it seems that the dollars and treasuries represent finite duration but infinite supply. That they'll just continue to print and come up with this, and to the point of $1 trillion a quarter being issued in treasuries. I mean, the amount of debt issuance is ridiculous. The amount of debt spending and stupid spending is ridiculous. And I think it's important to understand that we are seeing a shift away from U.S. Treasury debt being considered a asset. I mean, it's and I've mentioned recently that from a historical context, the idea of accepting another country's debt as an asset has a very limited, a very small historical footprint, where gold has a much larger footprint. And I believe you're seeing this with a lot of the countries, with China and Saudi Arabia, obviously Russia and India. All of these countries are shedding treasuries. They're not purchasing them, rolling them over. They're actually selling them, and I believe in favor of gold. And excuse me, when you look at the fact that, a lot of people point to the U.S. bond market as the Achilles heel to the BRICS endeavor, that, you have to have a bond market. Well, I really do believe that when we look at all of the settlement happening away from the U.S. dollar, and also the lack of purchasing by these countries and actually selling of treasuries, is beginning to chip away at the dollar hegemony, and more transactions with these countries in local currencies is starting to chip away at the settlement value of the dollar. The lack of bond purchases by these countries ultimately is beginning, I believe, will ultimately begin to affect the reserve status of the dollar little by little by little. That's my theme, this logarithmic decay. But, I think it's also important to note, and got very little coverage, is that the BRICS Bank is going to release their first swath of bonds. They're called the Maharaja bonds, and they're being made available for governments, financial institutions, and regular investors. But interestingly enough, the BRICS bonds will be available for purchases in local currencies only, not the U.S. dollar. So again, I think what we are witnessing with the dollar hegemony is death by 1,000 cuts. And too many people, again, going back to the nothing burger comments, where instant gratification is not fast enough for these people. You have to understand that if there is one model that I respect more than any from these BRICS nations, is the fact that they do things methodically. They are doing things in a way that once they rise to challenge the West to whatever degree they do, you can bet that they've dotted their I's and crossed their T's. Another 30 countries have formally applied to the BRICS. And we don't know exactly what they are. I mean, I have a good idea what they are. There's a list of them that came out. We believe it's accurate, but rather than speculating, we'll just simply say that this is a growing trend. And whether all of the settlement being done in local currencies, whether we see more and more countries signing up, or whether we see a new set of $28 billion worth of BRICS bonds that are being issued only in local currencies, little by little by little by little by little by little, and bang, all at once. Now, where is the bang? Don't know. Is it going to be this year? Don't know. I mean, you got Iran and Russia have officially abandoned the SWIFT payment system. And that's something to consider, is that, look, these are two of the BRICS members that are being sanctioned by the West. And when you have the Speaker of the House and basically the entire Senate that are saying, yeah, we're and the Biden administration behind a bill to not only sanction these assets like we did Iran, and you notice we're giving those assets back to them. That created a lot of pushback by the media, of course, and by the right side. But what they're talking about is actually confiscating the money that they've sanctioned or that they have frozen on behalf of the Russian regime, and using it to fund the battle in the Ukraine, because Congress doesn't want to give up any more appropriations, and perhaps rightfully so with all the money that we've spent. And I would simply just say to you that this is a situation where you're going to see more of these countries, especially if we end up confiscating Russia's funds, that are going to go to whatever length they can to circumvent the SWIFT system, the Achilles heel, if you will, or the pathway that the West chooses to inflict sanctions and punishment upon the rest of the world. It's happening, and it's the dumbest thing we could have ever done. Let that genie out of the bottle. A couple other things. I know Vivek Ramaswamy just dropped out of the race. My guess is he'll end up being Trump's running mate, if I had to guess. In fact, I'm pretty sure that's what will happen. just a guess. But he came out just the other day publicly and said that the BRICS are establishing a currency backed by gold to replace the dollar as the world's reserve currency. Does he know something that we don't, or is he just following the same information that we've heard?
As we wrap up this insightful conversation with Andy Schectman, we express our appreciation for accompanying us on this venture into the dynamic realm of global economics. If you found this discussion as captivating as we did, remember to show your support by liking, sharing, and subscribing for more compelling content. We're committed to bringing you perspectives from experts like Mr. Schectman, continually shaping our comprehension of the ever-shifting economic landscape. Thank you for being part of this exploration. And until our next encounter, stay informed and stay curious.